Ladies and gentlemen, good day and welcome to the Kotle Patil Developers Limited Q2FY25 earnings conference call. For the duration of this conference call, all participants' lines will be in the listen-only mode. This conference call is being recorded and the transcript for the same will be put up on the website of the company. After the management discussion, there will be an opportunity for you to ask questions. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Savali Mangle from Adfactors PR. Thank you, and over to you, ma'am.
Thank you, Neha. Good afternoon, everyone, and thank you for joining us on the Q2 and H1 FY25 results conference call of Kotle Patil Developers Limited. We have with us Mr. Atul Borah, Group CEO, and Ms. Dipti Rajput, Vice President, Investor Relations. Before we begin, I would like to remind you that certain statements made in today's discussion may be forward-looking in nature and may involve certain risks and uncertainties. A detailed statement in this regard is available in the Q2 and H1 FY25 results presentation that has been shared with you earlier. I now hand over the call to Mr. Atul Borah, Group CEO, to begin the proceedings of this call. Thank you, and over to you.
Thank you. Good afternoon and warm welcome to everyone present on this call. Season's greeting from our end to everyone, and I wish you and your dear one a prosperous new year. Thank you for joining us today to discuss operating and financial performance of the company for the second quarter and half year ended September 2024. Let me begin by sharing with you my view on the real estate environment, followed by an overview of key developments during the quarter. Thereonward, Dipti will take over through you on the key financial highlights. Following this, we will open up for the question and answer session. Indian economy, we have seen the landscape continue to strengthen, driven by both domestic resilience and a gradually improving global outlook. RBI forecast growth of around 7% for FY25, reinforcing India's position as one of the fastest growing economy. Customer confidence indices have been reflecting optimism, and we have seen strong customer sentiment in the housing sector too. Stabilizing interest rate have further supported the sustained demand for housing. This robust activity within the residential market highlights a broader trend, increasing aspirations among the home buyer, driven by rising disposable income, evolving lifestyle preferences, and focus on premium and preferred location housings. Developers are responding by expanding their offerings to appeal to aspirational home buyers seeking enhanced living experience. Growing infrastructure development and rising employment rates are creating new opportunity in the emerging micro market. For example, in Pune as well, we have seen a well-developed transport system, improve connectivity with other parts of the city, help Pune secure the one of the top spot in the ease of living indices among the Indian cities. The upcoming second phase of Maha Metro project is expected to enhance the city's transport system as well. The city boasts of good infrastructure even in remote areas, which contribute to increased demand across existing and emerging micro market. In Mumbai as well, the project like Mumbai Hub, Trans Harbour Link, Coastal Road Project, Navi Mumbai Suburban Rail Phase 2, multiple metro lines, and enhancing connectivity leading to residential expansion in the areas like Navi Mumbai, Thane, western suburbs. Similarly, Pune benefits from initiatives such as Pune Metro Rail expansion, Pune Ring Road, and improvement to bus rapid transit system. Coming to the operation performance during the quarter and half year ended 30 September 2024, our Q2 FY25 pre-sale value stood at 770 crore with a sales volume of 1.03 million square feet. we have registered 22% growth in our pre-sale value, making it the highest ever quarterly sales value. The complement of offering across segment and preference has enabled us to continue on the strong growth trajectory. During the half year, our pre-sale value stood at 1481 crore with a volume of 1.99 million square feet. 24K luxury segment contributed to 30% of our pre-sale by value for H1, reflecting the sustained demand for premium and high quality residences. This number was 12% for FY22. The sales momentum at our Life Republic Township projects remains strong, further reinforcing our leadership in Pune market. Sales volume of Life Republic stood at 1.03 million square feet during the first half of the financial year. Over time, we have expanded offering from 1 bedroom, 2 bedroom, 3 and 4 BHK as well as row houses, villas at our flagship project Life Republic, alongside developing infrastructure aimed to enrich the lifestyle of the residences. As a result, Life Republic has seen steady growth over time. Going ahead, large value addition opportunity is expected to materialize given the pending development potential of 20 million square feet in the upcoming phases of the project. Robust sales and timely execution of the project resulted in firm collection of 550 crore in Q2. Collection for H1 reached a new high of 1162 crore. Moving on to the launches, year to the date, we have launched projects with nearly 2.2 million square feet in the saleable area. This includes strategic launch across micro market designed to cater to the varying preferences of home buyers in Pune and Mumbai. I am happy to share that recently we have launched a project in Sector 2 in Vashi, making our entry in Navi Mumbai market and expanding our footprint in MMR region. As we look ahead, our launch pipeline remains robust, with the project representing a total GDV potential of 7,000 crore plan in the fiscal year. Nonetheless, we are excited about our robust launch pipeline plan for the second half as well. These launches along with our sustenance inventory position us to achieve our growth targets. On the business development front, we are focused on deepening our footprint in high growth markets of Pune, Mumbai and Bangalore. Our approach is toward building a balanced portfolio positioned to capture demand across all the segments, reinforcing our role as a trusted brand across housing spectrum, as well as plotting, which will be a new segment. During the first half, we have recognized revenue of 650 crore. While the first half has been low on revenue recognition, we are on track to close year with strong deliveries and revenue around 1800 crore. Moving onto the margin, we have recorded 23% gross margin for the H1. As the higher margin projects are recognized in H2, there will be further improvement in margin. We are committed to improving our margin through enhancing operational efficiency at every stage of the project life cycle, from cost management to pricing strategy. As the scale starts reflecting in the P&L, there will be positive impact on operating margins going forward. Cash flow remains strong. Operating cash flow for the quarter stood at 442 crore. The real estate sector is experiencing a strong growth, and KPDL is well positioned to capture the significant value with its proven track record. Historically, we have delivered improved performance in the second half of the financial year. We expect a similar trend to continue in the current financial year as well. KPDL's growth trajectory is supported by robust governance framework, strong balance sheet and brand recognized for quality and trust. With a legacy of over 3 decades built on quality, customer satisfaction and operational excellence, we have the foundation, the team and the vision needed to navigate the evolving market landscapes. Here, I would like to share that we have deepened the leadership pipeline through selective recruitments, vision setting and succession plan, creating a robust talent platform for accelerated business growth. We are confident that our balanced approach, strong financial management, and commitment to innovation and customer satisfaction will continue to drive value for our stakeholders. With this, I now hand over the call to Dipti to share the financial highlights.
Thank you, Atul. Good evening, everybody. I would now like to take you through our financial performance for the quarter and half year ended 30th September 2024. Under CCM-based accounting, our Q2 revenue stood at rupees 308.3 crore, marking a significant increase from rupees 198.2 crore in Q2 of the previous year. For the first half of 25, we reported revenues of rupees 649 crore compared to rupees 769 crore in H1 FY24. Our EBITDA for Q2 FY25 was rupees 16.2 crore, an improvement from rupees 3.5 crore in Q2 of FY24. For the half year, EBITDA reached rupees 43.9 crore. Net profit after tax post minority interest stood at rupees 9.7 crore for Q2 FY25 and at rupees 16 crore for the first half of FY25. Our strong construction momentum led to robust collections. Our strong operating cash flows continue to enhance liquidity, facilitating further reduction in debt. Our net debt as on 30th September stands at negative rupees 58 crore. For H1 FY25, operating cash flows stood at an impressive rupees 442 crore, underscoring our commitment to financial discipline and operational efficiency. In conclusion, our focus continues to remain on maintaining sales performance, timely execution and deliveries, strengthening the business development efforts, which will continue to drive overall performance of the company. Thank you, and I now request the moderator to open the line for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Viraj Mehta from Enigma. Please go ahead.
Yeah, hi Atul. Atul, my first question is regarding the margins. Just wanted to understand, this quarter margins actually were at like 5%, few bits here and there. It is actually even lower than the first quarter. And I understand that there are overhead costs, but the revenue in spite of higher revenue recognition, how did the margin slip off in the second quarter?
Thank you, Viraj. As an quarter specific, as you mentioned that 5.6% as the EBITDA, at the same time the gross margin is stood around 23% for the quarter. As an blended EBITDA for H1 stood around 7%, and we see that H2 will have higher margin recognitions and gradually it will grow. So I would say that there are a couple of projects which is recognized during the quarter which are of low margin projects, and gradually once we are getting a better project to support P&L, the margins we see on the upside.
So just to recollect, at the start of the year in Q4 concall commentary, you had mentioned that we will do early double-digit margins for the year. Now, if we have to do that, we have to do 13, 14, 15% margin in the second half. Is that doable?
Yeah, Viraj, it's doable, and we have evaluated. As I said that in second half we have a couple of projects which are of high margin. Gradually APR has picked up, and once it gets recognized, as I said that we see the year in the early teens, which is still doable, and we are quite hopeful for that.
Right. And as far as interest cost is concerned, I mean, as an outside investor, it's very difficult to understand because last year in the second half, we almost had 52 crores of interest cost, which was 20 crores in the first quarter and 11 crores. Like, what will it be for the full year? Will it still be 70, 80, 100 crore? Like, just a ballpark number for the interest cost.
Yeah, Viraj, I think as you mentioned, it is in the range of 70, 80. That's where we forecast.
So it is 30 for the first half, so it will be like 50 crores in the second half.
Yeah. So this goes according to our interest policy, recognizing in the P&L and couple of projects where the interest get recognized under the WIP. So I see that around 70-75 crore is roughly the number, as you said.
Right. Okay, sir. Best of luck. And last question on BD.
Sorry to interrupt you, sir. I request you to come back for a follow-up question.
No problem. Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to 2 per participant. I repeat, please limit your questions to 2 per participant. Thank you. The next question is from the line of Biplab Debbarma from Antique Stock Broking Limited. Please go ahead.
Good afternoon, everyone. Season's greetings to you all. So my first question is, we see that in the PPT, you have reduced the launch pipeline from 8,000 crore to 7,000 crore. Just wondering what could be the reason of reducing the pipeline, launch pipeline.
Yeah. Thanks, Biplab. So there are a couple of projects we have reviewed. Considering the approval timeline, we see that okay, there may be instead of quarter four, few projects we see may go in quarter one of the next financial year. At the same time, in Kharadi, we foresee that okay, there are some certain opportunities of accumulating more land parcel around the project. So the phase what we are launching, we are restricting up to 0.55 million instead of entire phase at one go.
Okay. And so far, so now you have given a revised launch pipeline of 7,000 crore, and of which you have till date launched 1,800 crore. So you have around 5,200 crore of launches in second half of FY25. So, sir, how certain are you in launching most of the projects in the second half of FY25? Considering, see, you have election in Maharashtra, and we have been hearing that there are some certain challenges in some market regarding approvals. So, considering everything, you would have better idea. Considering everything, how certain or what would be the probability of you able to launch the entire 5,200 crore in second half, sir?
Thank you, sir. As you rightly mentioned that there are definitely few uncertainties on dependencies as well on the approvals, and considering the elections, all this environment. I think Pune portfolio, we have seen a visibility of launching this as per our schedule itself. And maybe in Mumbai portfolio also, we are trying our best to meet the expectations of this launching. However, maybe post-election or maybe by mid of the December, we have to take a call if this pipeline will have any changes or.
Okay, so sir, just to summarize, you are certain about Pune launches, almost certain it will happen. Regarding MMR, you would be able to say with better certainty post-election. Am I correct, sir?
Yeah, because see, these are more redevelopment, so this need a couple of more exercise of evacuating the societies and demolitions, and post that we get the final sanctions. Even though this quarter we have launched Vashi project in Sector 2, but despite all the fact, I think we are still hopeful that this will come in this financial year itself, In case we see any deviations, we will certainly update on this.
Okay, sir. Thank you. I'll come back in the queue.
Thank you. The next question is from the line of Shreyash Mehta from Equities Capital. Please go ahead.
Yeah, thanks for the opportunity. My first question is on BD. Sir, it's almost a year and BD seems to be, one of the lagging points as far as Kolte is concerned. So where are we on this? Despite muted 1H, we are still maintaining our target of 8,000 odd crores. So how confident are we on that front?
Thanks, Shreyash. As far as our BD goes, we are in couple of BDs. We are in quite advanced stage, and we are pretty confident that this number of 8,000 crore of our guidance we will meet.
Okay. So, sir, assuming, even if we do 8,000 odd crores in second half, how are we placed as far as, FY26 pre-sales are concerned? Because, majority of the projects for us, will be opening by second half. And, largely LR would be there in terms of inventory for us. So, is there any risk, because even if we do 8,000 odd crores in second half, those would be coming on stream or, will be opening, say, in FY27 or at max, base case scenario would be fourth quarter of FY26.
No, we don't foresee, because usually when we close the BD, it's like a journey of 9 months till 12 months for securing all the sanctions. And accordingly, for this financial year, we have not carved out any sales from BD, new BD itself. So I don't see. At the same time, the launches so far 2.2 million we have launched plus sustenance inventory, and upcoming launches will keep us enough in inventory for our target to meet.
Okay, so you do not.
Yeah. The BD is definitely for the next financial year itself, and definitely there will be then for FY26 it will support us a lot.
Got it. So, sir, just to reconfirm, you are saying that probably whatever BD we do would be, coming into picture or into play in FY26 itself. The turnaround time would be faster. Is that what you're trying to indicate?
See, those BD where after post closure, it's a minimum timeline of 9 months is there, 9 to 12 months for launching on the project. So we don't foresee that even though we close the BD, will immediately come in the launches.
Okay. So, sir, can you help me reconcile
Sorry to interrupt you, sir. I request you to come back for a follow-up
It's just a follow-up. It's just a follow-up of what I have just asked. So, sir, just wanted to reconcile, the 30% growth which we are targeting for FY26. If you can help us, in understanding from LR how much, we could be gathering from the existing inventory and how much, would be coming from new projects.
No, so for FY26, it's very early to comment. We'll definitely give the guidance for the next financial year and what are our sales strategies. It's very early to comment on that FY26.
Sure. All right. Okay, sir. Thank you and all the best.
Thank you. The next question is from the line of Rohit from iThought PMS. Please go ahead.
Yeah, good afternoon, everybody. So, sir, my question is on LR. So it continues to do well, and I think now the realizations have touched almost 6,900. So my question is, given where the project is, do you see any kind of realization ceiling there, and at some price level the demand may start to taper off?
So considering the Hinjewadi micro market and specifically Pune West micro market, we've seen a tremendous demand, in particularly in those micro markets, given the fact that there are a lot of infra developments are happening, in particularly in Hinjewadi region, metro, and all this. We see this demand is sustained and will grow from here onward. There is absolutely no concern over the demand on those particularly Life Republic itself. And this is one of the flagship projects. This is a preferred location. So we see that here onward the demand will definitely grow up there.
Okay, got it. And my second question was, sir, I mean, in the past, I mean, we have a slew of launches in Bombay, almost close to 2,000 crores in H2. Notwithstanding how much ever we will get pushed to the next year. But in the past, we've seen that, I mean, some of the older projects have not been that profitable. So, what are the key learnings for us? And I mean, what are we doing now differently to ensure that we don't go back to poor margins and overall drag on the numbers for the company?
So, at least on the margin front, we are the ongoing projects and the recognitions, we are tracking it and monitoring it very closely. And here onward, we see a better side improvement itself. At the same time, when you ask Mumbai launches, so we have a couple of pipeline, like Vashi, as I said, already launched. Lakshmi Ratan Versova, we are securing most of the sanctions now. So that we have certain visibility coming up. Jal Mangal Deep, Koregaon, here also we see a certainty and certain approval progresses. At the same time, Vishwakarma. So we are monitoring our approval progresses, and I think once we secure that, we will good to go for the launches, and we'll definitely try to make it for this financial H2 itself.
No, but from a margin point of view, I'm asking, I mean, we may launch, but I mean, because in the past, margins have been an issue in some of the projects in Bombay. So, like, just wanted to get your sense on these projects, if this is, I mean, is there some change from the way we look at it, or?
So as an overall pricing, we have seen upside in the Mumbai portfolio also. Here onward also, when we are selecting a couple of redevelopment projects, we are setting our strategy of margin to the team at the time of acquisition itself, which is roughly around 16 to 18%. And accordingly, we are strategizing our new BD. I think you will see definitely some improvement in redevelopment space as well here onward.
Okay. One more question was in terms of finance costs.
Sir, I request you to come back for a follow-up question.
Okay.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address the questions from all the participants, please limit your questions to 2 per participant. I repeat, please limit your questions to 2 per participant. Thank you. The next question is from the line of Himanshu Upadhyay from Berglock Capital Private Limited. Please go ahead.
Hi, my question was on Life Republic. If we look at nearly 3 million square feet is pending planned launches in FY25, okay. But land for approval is around 2.16 million square feet in Life Republic, what we have shown on the slide number 17, okay. So, from where does the remaining portion comes, okay? And it will be across how many types of projects, or how do you look at it? Means, it's a mature, it's a, let's say, existing market for us where we do a significant sales, but 3 million square feet of launches. Can you give some idea? How are you planning the project launches and type of projects you are looking at there?
Thanks, Himanshu. So Life Republic is almost around 400 plus acre of township project. And as you rightly said that we already launched 1.19 million square feet, and you mentioned 2.16. So the total pipeline for this financial year we have is 3.8 million square feet. Depending upon how the absorption happened, we prepone certain launches as well. And there is, because it is a fully paid acquired land bank, so we have all the visibility in terms of infra and at least on the project itself. So for the second half of this financial year, already this 2.16 is already under approval. We have in couple of sectors we have already submitted for the approval. We are waiting. Once this approval will get, we will launch the project.
But can you give some light on what means a set of buildings or what combinations you are trying to do in Life Republic?
This is a mixed-use development project. We have project or sectors, different sectors we carve out for different inventory, start from MIG mid-segment inventory to HIG to 24K luxury. Recently, last quarter, we have launched R5 sector of almost 1.8 million square feet. And the first phase of 1.8 million square feet, 0.9 square feet, we have launched, which is the ultra premium inventory. Similarly, we have villas, we have row houses, we have, as I said that since it's a township, it have all the mixed use development, including commercial, retail, couple of maybe for future earmarked certain commercial project as well. So this is not define a particular project line. It's an entire segment of inventory we have in this project.
And one thing, you made a comment that we have worked on vision setting and selecting and selective recruitment, okay? Can you elaborate on what the vision is now versus previously and what positions have you recruited? And one of the challenges has been too high a churn, okay?
No, so Himanshu, it is not churning recruitment. We are strengthening our team. At the same time, we, when the business are expanding, we feel that okay, the talent pool is required for the better execution, for efficiently managing this business, and we are strengthening our capabilities. So it is out of our strategy of improving on our capabilities rather than churning out the numbers.
No, what I am saying is, how many new employees would you have hired, and what, when you said that vision setting, what do you mean by that, and any changes you have in that?
We have hired key positions like CFO Ravi Porwal has been hired in this financial year. We have our operations head we have hired. So we are rebuilding. So I cannot name you all the hirings, or maybe, but if offline Dipti can give you if any information is required. But across the segment, like it's not just one department, we are strengthening all the departments across it. So and that is very much as a part of our strategy for strengthening our capabilities.
Okay, thank you.
Thank you. The next question is from the line of Bharat Seth from Quest Investment Advisors. Please go ahead.
Hi sir, thanks for the opportunity. So my question is pertaining to the finance cost. This finance cost looks very high, 75 crore per annum plus whatever we are adding into WIP could be 20-30 crore. So around 100 crore. Now this is largely on account of we are entering into the pre-sales agreement with to secure our sales. So don't you think that in this kind of environment and the market traction is good and your commentary is also coming good, that by doing a pre-sales tie-up with a large PE player, we are doing some injustice to the shareholder?
Sir, this is toward the strategy for expanding and growing the business as well as the ongoing projects to be supported with the right amount of cash flow, securing the TDRs and the nearing approvals. And we see that okay, this because it's coming from Marubeni, the Japanese fund, as well as couple of Motilal Oswal. So this is very much at a project strategic financing, as well as helping us for the growth of the or for the new BD. As you rightly said, okay, here there are a couple of flexibilities and advantages since it is not coming at a commitment to the company with a zero coupon, which gives a lot of flexibility for us utilizing the cash flow. At the same time, we are seriously evaluating since the CRISIL we are AA minus rated, and there's a ample opportunity for reducing our finance cost, and our team is actively working on that front as well. And I think, wherever big, but those lines are specifically for particularly project financing or construction financing. At the same time, we are securing for the growth capital as well.
Sir, I appreciate what you are saying, but our business and the size of our company and balance sheet size as well as cash flow, we are, because of the past launch that we have, is likely to come into revenue stream. So that now, is that really required or not? That it is our humble request that you reconsider that it is costing. I believe that underlying cost of interest could be as high as 12% also, depending on the realization. And we can secure a finance at much cheaper rate. So in that,
we will evaluate. I already said that the team is definitely working on that, and the suggestions is well taken. We will definitely evaluate this.
and second thing, you said that this year will report around 1800 crore for full year revenue, and our margin will be in the early double digit. So can you give some sense the kind of, our pre-sales and all next year, how do we really see, and how do we see the margin traction from this early double digit to next year?
So, sir, for this financial year, we have evaluated our upcoming completions, and based on that, we have strategized few things where we see that there is definitely a upside on the margins. For the next financial year, we will definitely engage with you on the next call and can give you some more lights toward the margins for the next financial year.
Okay, sir. Thank you very much.
Thank you. The next question is from the line of Kiran from Table Tree Capital. Please go ahead.
Hi, good afternoon, sir. Sir, a couple of questions. The first question is, I'm just doing some math here, but essentially 1800 crore revenue, which means in H2 we need to do 1150 crore revenue. Now, if we have to reach your guidance of early teens, 12-13% for the entire year on the 1800 crore revenue, then we need to do about 16 to 17% EBITDA margin on the remaining 1150 crore. Is this real, or are we overestimating our EBITDA?
There are with certain projects which is coming in the recognition in H2 with higher gross margin, as well as there are few areas where we can definitely improve. So at least for the financial year, we estimate around 11-12% is achievable number.
Got it. Okay, sir. So 11-12%, hopefully we deliver 12% for the entire year. The second question then what I have is, sir, given that all the older projects, which are low margin projects, the proportion will continuously reduce, shouldn't we at least deliver, so if you're delivering, let's say 15-16% EBITDA margin in H2, for FY26, shouldn't we just deliver 15-16% and more, because all the older projects with lower margin are done?
Gradually, we will definitely improve on the margin front. Despite H2, we see a better as compared to H1, and we see that, okay, but at the right time, we will definitely engage with you on the margin front.
No, sir, I'm not asking for projection. I'm just asking for if H2, if you are delivering 16%, those are the projects that will continue to revenue recognize, for the lack of a better term, over the next year as well, right? Because revenue recognition is very different from pre-sales, right? So we should at least deliver 16.5% for the next year, if not more. Right? We were guiding to 18-20% reaching in Q3, Q4.
Yes, surely.
Okay.
Thank you. The next question is from the line of Darshil Jhaveri from Crown Capital. Please go ahead.
Hello,
Good evening, sir. Thank you so much for taking my question. So some of my questions have already been answered. So just wanted to, get a sense that, like, I think for a pre-sales in a PPT, we are mentioning 25% growth. Like, so accordingly, do we have enough launches planned for FY26? I just wanted to know a bit about that, sir.
Yes, sir. We have mentioned our launch pipeline in the PPT. And I think we already answered on the launch pipeline.
Okay, fair enough, sir. And just like wanted to understand, like, if a new government comes in, will that, slow down our progress, or, what could just like what kind of an impact will election have on, our sector as of such? So, any kind of color that you could, give from your past experience?
See, we have seen uplift in demand, largely from the IT spaces, those who are our target group of customers. So we see that, okay, this changing in government, obviously, there are few dependency on the approvals, but so far we don't see that, okay, there is any new policy strategies or on which they are online, those who are working, and so we don't foresee any adverse or any negative impact respective of who comes in power.
Okay.
They are doing all good for real estate. Yes.
No, fair enough, sir. And just the last one question. In terms of like the on-ground demand, could you just say which part of, like, is the luxury segment or the, mid-premium or, the lower end, which strata you feel going forward, can do better? Like what kind of, what's happening on the ground? What could you just, maybe brief us a bit about that, sir?
No, so our portfolio is a mixed portfolio. We gradually last 2, 3, 4 quarters, we have seen the premium demand has rise, and we have benefited. Our 24K luxury brand has uppicked in the overall sales volume. But yes, as you mentioned, that we are quite focused on mid premium as well as the upside as well as the premium segment. This will remain our focus till coming next few more quarters, considering the demand scenario going on.
Oh, okay, fair enough. So yeah, that's it from my side. All the best, sir. Thank you.
Thank you. The next question is from the line of Shubhrata Sarkar from Mount Intra Finance Private Limited. Please go ahead.
No, hello, sir. Maybe I'm repeating the same which other like analysts are concerned about. Mainly, it's about the margins, sir. Like why, uh, why like our margin is substantially lower than that of the comparable other company. One is like you are saying that it's because of the legacy effect, but other companies also had got legacy project, but their margin was not that compressed, to be very honest. If you highlight on that. And now second, sir, whatever pre-launch we are doing, pre-sales we are achieving, that at least at what kind of margin we are targeting at?
Thank you, sir. So I think I have answered, but I will still. So at least on the gross margin, since this quarter, if we or this H1, we will specifically talk where a couple of projects of low margin projects has recognized. Going forward, we have a strong pipeline of recognition, and we see the margins going up. At the same time, the gross margin are even for this quarter looks around 20 to 23% of our gross margin, which will gradually grow when the higher APR project will start recognizing. But yes, given the fact, it all again depend how much revenue recognitions is happening. If there is no much recognition, despite of that, there are few costs which is remain in the P&L, which will impact the EBITDA numbers. Considering all these things, we have seen that okay, in H1 we looks better numbers, and we have a visibility of those. So I think I can again don't want to repeat on those. At the same time, when you are asking the launch, we have visibility of few launch pipeline. For Pune region, Life Republic as well as Mumbai, and we are closely monitoring those. And so far we see that, okay, these launches are very much feasible. Obviously, there are certain factors which is dependable, so we'll keep updated on those lines.
No, sir, my question was more on whatever pre-sales we are giving guidance. Now, sir, at that pre-sales, for those projects, what is the margin we are targeting? Like, but what is our philosophy behind while we launch determine a price for all these pre-sales? What kind of margin we are factoring in or build in while calculating the launch price or whatever pre-sales at that price?
So, sir, to answer this, there are, because the projects come from different strategies, certain outright deals, certain joint venture projects, certain redevelopment projects. At the same time, we have set certain internal guidance going forward as well. For outright deal, we have expectations of around 25% of the margin. For joint venture projects, around 17-18% of the margins. Redevelopment works around the same margin. So going forward, we are keeping a close eye on the margin, and we are following on those lines.
Thank you. Our next question is from the line of Ashish Shah from HDFC AMC. Please go ahead.
Yeah. Hi, good afternoon, Atul. Just one question from my side. In terms of the business development that we are targeting of about 8,000 crores this year, could you update on how much we've added so far, and for the rest, where are we in terms of the entire process? Are we close to, do we already have those kind of proposals on the table, and are we at a fairly advanced stage, or you think it's just still a lot of distance to cover to reach that number of 8,000 crores of BD?
Thanks, Ashish, for this question. Very interesting and very important question you have asked. And just to answer, there are few serious deals reached to a very conclusive stages. We will definitely announce at the right time. But given the fact this target of 8,000 crore, so far we have a good amount of visibility that will surely come.
Okay, but just to get a data point, have we already closed anything so far till, let's say, till September or October, or
yes,
nothing has been closed?
Yeah, we have certain things we have closed. Due diligences and most of the formalities are under approval, under process. We will definitely see that this will close in the sooner time. Maybe if not surprise this month, next month we'll definitely announce those deals.
And broadly, Atul, what's the sort of mix between the cities, between, let's say, Pune and Mumbai? What could be this mix of 8,000 crore?
So Ashish, we have a strategy of 70% for Pune market and 30% for non-Pune market. So far, as a BD is early, whatever you get, you first of all try to close that. But still, we will stick to that strategy. We are actively focusing. Even in Mumbai, we have concluded one deal, and which is going in the due diligence phase. So we are quite active in Mumbai BD as well, Bangalore BD as well, and even in Pune BD as well. But yes, as a guidance, I can tell that 70-30 is our expectations. Will be around those numbers.
All right. Thanks a lot for this. Bye. Thank you.
Thank you. Ladies and gentlemen, we'll take this as the last question. I now hand over the conference to the management for closing comments.
Thank you once again for your interest and support. We will continue to stay engaged, and if you have any further questions, please feel free to reach Dipti Rajput at KPDL. Look forward to interacting with you on next quarter. Thank you very much.
Thank you. On behalf of Kolte Patil Developers Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
There we go.